The share market plunges. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. I have my stein of coffee and I thought we'd have a look at this article from news.com.au discussing, well, the 3% correction in the stock market yesterday. Now, if we jump over here to trading economics, we can see just the volatility in the market at the moment. A 3% move in one day is pretty big. We can see over here Dow Jones down 6.5, S&P 500 down 5.6, Nasdaq down 4.6. So it's climbing up, it's going up on a wall of worry. And the question is, well, the concern is, how much of this is pushed by retail investors jumping in and the good old fear of missing out? I had one gentleman leave a comment on one of the community posts I made saying it felt a lot like the 2017 Bitcoin crypto surge. Does everyone remember that? Because fundamentally, it's all based on a hope of a rapid recovery of the economy, particularly in the US. Is that actually going to manifest? Will that manifest here in Australia? I've got 3 videos lined up for today just looking at rental discounting throughout Australia in different cities. How do you think that's going to affect the ability of those people to service their mortgages? Do you think that's going to drive up our arrears, everyone? And remember, cash rates are really low. So we're just at the beginning of a recession here in Australia. Our own stock market has climbed back up. It's recovered a lot of the lost ground since it crashed from all-time highs. The US has just been crazy, but the US are also money printing like there's no tomorrow. So let's have a look at this article. Because, well, fundamentally, are these companies overvalued? Particularly our banks, are they overvalued? Which is a big part of our market. Because how much money they've put aside for losses on loans. How much economic activity is still going to happen this year? The unemployment rate is 6.2%, everyone. Job ads are very low. I mean, you can have a look at this. They've plateaued. Unemployment shot up. Underemployment shot up. I think consumer activity, are people going to run and jump back in? So, the Australian share market fell heavily today, which is yesterday, providing a sobering and costly reality check for those investing in a sharp recovery. The Australian share market's golden recovery came to a screeching halt after the United States provided a sobering reality check to the true cost of the pandemic. Investors had been scrambling back into the market on the belief the worst of the economic shock was in the rearview mirror, but the Federal Reserve poured cold water on the narrative in its outlook overnight. See, here's the thing, guys, that I was even mentioning it to Rachel, and she goes, oh, should we get back in? Because we've, hashtag not financial advice, but, we moved out of shares into cash some time ago. And I'm waiting just to see what happens. There's no rush. Frankly, I think that's probably advice for life in general. Just take it easy. Don't rush. And we'll have to see how it opens today. Among the numbers of concerning forecasts, it expects unemployment in the world's largest economy to soar to 10% by the end of the year. This triggered an aggressive sell-off on Wall Street, and the local indices followed, which investors abandoned their positions, and the ASX plunged more than 3% lower. So, we'll have to see. Actually, I need to have a shot of coffee. We'll have to see. How do you think the market will go today? How will it open? I'll release this video before the market opens. Let me know in the comments. I'll have a coffee. So, will it open high? Will it open low? Doesn't it usually have a bit of a spike on the end of the day because it's Friday? Global markets were expecting the Federal Reserve to provide optimistic talking points and upward projections. CMC Markets Chief Strategist Michael McCarthy told news.com.au. Really? Oh, well, that's what they're priced in. See, it's all just smoke and mirrors, isn't it? The people are making emotive decisions. Investors are, they're just trading on the news, aren't they? These are just news-based fluctuations. And isn't that one of the hardest ways to trade? Isn't it the most dangerous way to trade? Where sometimes, it's different to a long-term investor. A long-term investor, you just put it in their pocket and say, okay, I know this business. I know the story of the business. I'm confident that it'll recover. I'm confident that it'll be a good business. That optimism they were looking for did not eventuate, and we've seen a very sharp turnaround in sentiment, he said. Today's session attracted about 40% more activity than average, which Mr. McCarthy described as a heavy commitment from sellers to exit the market, suggesting losses will continue at the open of trade tomorrow. The fallback through the 6,000 level for the index brought further selling with it. It's an important decision point for this market, and a fall below it was bad news, the veteran strategist said. Well, the 6,000, it's a psychological number. The zeros are a psychological number. Let me just check. How's gold? Oh, gold is at 1724. It lost 10. Silver is at 1764. It lost a bit too. But these are all psychological numbers, aren't they? The zeros. People like the zeros. And it's nice round. I must admit, whenever, where I'm chucking money at the mortgage, that's my big thing at the moment. And I want to get those zeros. I want to get those, those next numbers. I've got Rachel, come on. I'll just chuck a bit more on there so it's a nice, even number. And that close news near the bottom of the range suggests we could see further damage to Australian share prices over the coming days and weeks. Well, it's not really damage, is it? I mean, we need to see the impact of this recession is going to have on the valuation of these businesses. Are they going to be making as much money? Or am I thinking too much from a fundamental perspective? Is that not how it's done anymore? Let the day traders let me know. The potential for a V-shaped recovery and thinking about that is receding. Okay. Well, we're in a recession, guys. We're not going to have a V-shaped recovery. Today's result snaps a 7-day run of positive gains for a market which has recorded a healthy rise since the depths of the economic shock of the pandemic. The broader All Ordinaries rose more than 30% from March 23 through a close of trade on Wednesday, adding $500 billion in value to the index. But Mr. McCarthy said the reality check delivered today was the turning point in the path to recovery. The Federal Reserve noted interest rates are likely to stay at historic lows through to 2023, which places enormous pressure on banks' loan margins. The major lenders, Westpac, Combank, ANZ, NAB, all suffered significant falls as a result, plunging between 4.4 and 6.2%. Berman Chief Investment Officer Julia Lee said the major test for the market's recovery will come when companies report their earnings towards the middle of the year, when the true cost of the pandemic will be revealed. Now, Rachel was at the bank the other day, and she was talking to the banker, getting some stuff done, and he was asking her, he asked her about savings accounts for the kids, and she said, well, no, we're encouraging them to save, and we're getting them to buy physical metals, like gold and silver, so they can hold it in their hand. And that kind of blew his mind. For a banker, probably a teller guy, so, I told her you should have pushed him towards the hidden secrets of the money, but that probably would have been too much baby steps. But then he was also asking what she thought would happen. And she started to realize she probably has a better understanding of just what's happening around the world than someone working at a bank, at least at a low level. And she was going, we'll see what happens once all these mechanisms are relieved in September. It won't really hit until February. People will hold on. They'll be hoarding cash to make sure they can keep going as long as they can, and then it'll hit in Jan, Feb. After all of a sudden the Christmas expenses come in, then the trouble will really hit. So we'll see it in September, and I think, even if they keep JobKeeper on board, once these mortgage holidays start to slowly dissipate, it won't be like boom, day one. We feel the impact. It'll be a trickle of impact, because smart people, I hope there still are some out there, will be hoarding their cash for when they need it. So but here, Julia is saying fundamentals, because this is the thing. We've heard about how much banks have put aside for these losses that they're expecting. What's going to happen when these earnings come out? What's going to happen with all these dividend strategies? People invest in all these dividend companies to get a monthly return from them, which sounds very appealing. What happens when they start falling over? Many investors have gambled on a snapback in fortunes, heavily buying up shares. Because psychologically, because we're used to, these levels here. We'll go here, go to 5 years. We haven't been below 6,000 since 18. Oh, since 19. So in recent memory, we're used to above 6,000. So anything below 6,000 seems like a bargain, just psychologically. It's like when you're negotiating, you often put a higher price first, so you peg the conversation, and then you work from there. It's a strategy that people use. It's the same thing we're seeing here. The big question in the medium term is if earnings growth has come back to the party, or whether we will continue to see weakness and see prices being dragged back down, she told news.com.au. At the moment, it's a battle between the outlook for earnings versus expectations. And at the moment, the market is pricing in a recovery. As long as those earnings materialize, then the market is fine. But if those earnings don't materialize, then prices will come back down to earth to reflect that. So there's the question, fundamentally. Do you think the consumer confidence and demand will snap back to provide those earnings so those earnings forecasts are as expectations? Or will we get a bad news and you get a sell-off? That's what we'll have to see. That's the question. So guys, what do you think? Where do you think it will sit? Have you jumped on board? Or are you just waiting it out? Or are you shorting? Let us know your adventures in the comments below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support the content I make here, there are a few ways you can. You can simply share the content and comment. That helps the channel grow. The algorithm loves that stuff. If you want to support us a little bit extra, there are a few ways you can. You can join the channel on YouTube or Patreon for a small financial contribution. You can use our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. Doesn't cost you anything, and I receive, an advertiser's commission, a couple of cents. But it adds up. We also have merch that you can buy. You can see the pocket squares behind me hanging on my bookcase that Rachel made. You can use Gold Pass from the Perth Mint or support us via PayPal. Take care, guys. Have a great day. I will see you in the next video.